Good morning, everybody. How's everybody doing this morning? Hoping had an awesome start to our morning. Man, we got some running in the overnight session. We were going crazy. The Bank of Japan raised its interest rates, and our market overnight trading just completely took off in the upward direction. We have tons and tons of buyers. Man, we have some strong sentiment this morning. Today is FOMC, so we may or may not be taking any positions today. That remains to be seen. But yeah, we'll see what happens. But on today's episode, guys, the other day we went over our why we wanted to start trading. And today, I wanted to go over after the why. So if you figure out why you wanted to start trading in the first place, you figure out, what kind of schedule you have and what kind of commitment you want to put towards this thing. Now I want to go ahead and talk about what type of trading will you be getting into, and also to the different kinds of markets. There's options, there's futures, there's Forex, there's a whole bunch of other ones, but those are the main three. And of course, just your regular, stock market, your stocks, and stuff like that. But which one do you want to be a part of? And also to your why will translate to how much time you're going to put in. So if you're going to be a day trader, which means you are in and out of the markets within the day, you close all your positions before market close, and you're in the markets no more than a few minutes to a couple of hours at best. If you have the time for that, then I would say that one definitely takes a lot more chart time and commitment. And then there is swing trading. Now, swing trading means you're holding, you can hold a position for maybe a day or two, even a week at best, depending on your setup. Requires a lot less chart time, but you still got to get used to the charts, but it requires a lot less chart time, and you can hold positions for longer, but then again, you are exposed for longer periods of time. And then there is just the contrarian, and the contrarian is somebody who just invest over the long term, doesn't worry about day trading, nothing like that. You can still look at the charts, to find a significant dip to where you can buy more and then just hold it and let it do its thing, So yeah, it just depends on what kind of time you have. Now, if you're doing day trading or swing trading, your chart and time commitments are going to be somewhat similar. Day trading, you're just going to be in front of your charts a lot longer. Swing trading, you still want to know your charts. It's not like, oh, I see one direction and I'm just going to buy and that's it. You do have a 50-50 chance of winning or losing that trade, hitting buy or sell. But now if you want to carve out an edge in the market, you want to go ahead and develop a strategy for that. Now, let's say you're day trading and you're only risking 1% or 2% per trade per day trade. Now you want to take that same risk and apply it to your swing trading. You want to keep your risk relatively the same or lower if you're going higher, because you're exposed to the markets for a whole lot longer. So that is something to also consider. Now, if you want to be a contrarian and kind of just wait for price to take a really long dip and then buy it there, or you see prices at a certain level of highs and then you want to sell it there, you can definitely do that as well. It's a little bit more of a hands-off approach. You can still look at charts every now and then. To be honest, I do a mixture of both. I don't swing trade, but I day trade, as y'all can see, and also just do some contrarian investing. When I know the charts from day trading, and I know pullbacks and dips, and if a market looks like it's overextended, so I use my day trading knowledge also into my investing knowledge but except my investing knowledge, you know, that's over time. I don't have to be out of that within the day, you know what I mean, or within a couple of minutes. So it all depends on what kind of trader you want to be, you know, and also everything that comes with it, you know, and what kind of time you have to spend in front of your charts and things like that. Because like I said, guys, this is a commitment. It just depends on what you want to do with all of this. This is all customizable and it can all be done at your discretion. And also, if you want to purchase mentorship, or you want to purchase a course or anything like that, that may expedite your learning curve, if you will, because I won't say every single strategy works, but let's say you get a mentor and they teach you a certain strategy that they trade. It may or may not be profitable for them, but you can take the basis of that strategy and kind of configure things around it to make it your own, or just take bits and pieces of whatever that person is telling you and apply it to yourself and create something of your own. So what I did, I did all the common mistakes that everyone does, and that's till this day, that's the most common mistake. Is I went to YouTube Academy. You know, I'm one of those. I heard about trading, I went to YouTube Academy, and I fell down that rabbit hole. And man, let me tell you, when the market is just saturated with people claiming things left and right, and everyone targets new traders, you know what I mean? They specifically make videos targeted to new traders so that the new traders click on their videos, and then they get a bunch of views and things of that nature. So I would definitely find something solid, you know, a solid mentorship that you can be a part of. And the thing is, guys, you don't have to trade 100% how your mentor trades. If you do get a mentor, or say you buy a course, it's good to do those things, to buy a course. Let's say you're completely brand new, right? It's good to buy a course so you can kind of get the basis of it all and learn, you know, from there. It gives you a broader stepping stone, if you will, to getting into these financial markets, versus just you opening an account or a demo account or something like that and then just hitting buy or sell, buy or sell, buy or sell. It's going to take a whole lot longer, let me tell you. So what I did is I went on YouTube Academy and I saw all these videos. I followed this, I followed that system, I followed this system, I did the whole range, you know. But what I did was, instead of taking everything they were saying at face value, I took a little from here, I took a little from there, and I took a little from there, and decided to get the grasp of all of this. To be quite honest, I personally have never had a mentorship. You know, I've bought courses and things like that, which gives me a lot of the basis of everything, but I've never personally had a mentorship where I'm trading one-on-one with somebody. All of the things that I know today are self-taught, and I learned the hard way like an idiot, because it didn't have to be that hard, you know. But me being the hard-headed person I am, I have to learn hands-on myself. So that's what I did, and here we are today. And as you can see, if you're watching this on YouTube, I'm testing out this brand new strategy that I have that's going pretty well, which is part of my learning curve. You know, I didn't have anybody teach me this stuff, guys. I'm learning all of this on the fly. But I don't want that for y'all. Like, I want y'all to have a broader stepping stone. That way, you know, like I said, path of least resistance. Make it easier on yourself. You know, don't just try to, you know, bullhead these markets, because these markets will humble you real quick, especially if you're trading live capital. These markets will definitely humble you quick. But yeah, so just figure out what kind of trader you want to be. Seek out mentorship in the way that you want to trade, and go from there, guys. There's a lot of stuff out there. There's a lot of material out there. So just find what works best for you and apply that to the time that you yourself have available to use at your discretion. But it's 8:29 my time, so that's all we got for you today, folks. Please make sure to give us a rating and review anywhere this podcast is hosted, as always. And we're gonna get into these markets. Remember, stay sharp, stay steady, and trade well. We'll see you guys on the next one. All right, guys. So today I'm looking at all the bullish sentiment from the overnight. That that Bank of Japan rate really, look at this, shot the market. I entered here on the open of the market by accident. I had my auto trade entered, or my auto enabled, and it entered me in on a continuation candle, and it hit a take profit, but that was accidental. So we are accidentally up this morning, $425 as of this morning, and that was an accidental trade. But we do have a heavy news day, guys. So let's see, today 31st, Bank of Japan press conference. We got core CPI coming out of Europe, non-farm. We got the GDP month over month for Canada, PMI, federal funds rate, FOMC statement, FOMC press conference. So if you're going to be in the markets today, guys, I highly suggest you mitigate your risk as much as possible. Make sure you are keeping an eye on your risk. And if you are in any trades coming off of the late night, make sure you put those trades into profit, and you just watch the market do its thing. I may or may not take any trades today. That remains to be seen. Honestly, to be quite honest, I probably won't. But except for that accidental trade we got into. But to be quite honest, I probably won't take any trades today. So we may or may not get a trade today. But if you're watching this, as always, just kind of keep watching and watch the market unfold and play out. So yesterday, when we had this major fall, I said if price breaks this, it's going to break down, which price broke down. But I also said yesterday, this right here, I said buyers are going to want that price back. It's like a buyback move. Buyers are indefinitely going to want that price back. I think they came down to this level because that 5,500 was psychological. And then they came down to this level and all the way down and just triggered. I'm sure they triggered some iceberg orders, which were a bunch of hidden buy orders down here of different quantities. They triggered a bunch of iceberg orders and it just took the market. I mean, they didn't have a chance. Sellers didn't have even a little bit of a chance yesterday. So that remains to be seen today. We are getting a large wick here off of 55.50, guys. So 55.50 looks like a good zone. 55.50 to roughly 55.60 looks like the good zone where we might have some buying pressure happening. But yeah, sellers didn't stand a chance yesterday. But it remains to be seen. Let's see what happens this morning, and we'll see if we get involved at all. It is 8:34 my time. We do have a heavy news day, so honestly, my chances of getting involved are super low, but that remains to be seen. So stay tuned, guys. If y'all want to go ahead and watch the time lapse, and let's see how the market unfolds. If you're going to look at the charts, if y'all are watching this, if you're going to look at the charts, also pay attention to the time. That way you can see the way the market moves given price and time. Okay, so y'all can see how it moves during that stuff. So yeah, stay tuned and we'll see what happens. All right, fam, looks like I went ahead and just closed that trade out. It was gonna hit my TP, but I'd rather just take it at the high of this price right here, which was the high of this candle. It's probably gonna go a lot higher, to be quite honest, because if you ever see the Heikin-Ashi candles like this, where they're flattened out at the bottom, that means the market is flat up. You know what I mean? And also too, like yesterday, the market's flat down. So when it's flat up, that means there's just buyers coming in. And you can see right here that the VWAP has just been pointing up this whole time. VWAP and the moving average. The VWAP was above the moving average. Price was above the VWAP. And both sides, price was above the VWAP and the moving average as well. So that means that there's just a lot, that this trend was very, very, very strong. But I went ahead and just took the profits at the highs. It would have probably hit my TP right there. It broke the high right there. But I'm okay with that. You know, I was in this trade long enough. I've been in a trade like 30 minutes, and I'm not opposed to being in trades for super long periods of time, but we'll go ahead and just take the W on that. And I think we made back all our losses. I think we actually made some profit from what we lost yesterday. So that'll be continued. And yesterday we didn't even take a full loss. We took like a quarter loss because I made some of it back yesterday. But yeah, guys, that's trading for you in a nutshell. Lots and lots of patience. As you can see, I started in front of these markets at about 8:30. It's 10:30 now. I'm sure with the FOMC meeting and all that stuff going on, all the news right now, I didn't want to even really be in a trade, but I was kind of seeing what price was doing. This trend was very strong. And yeah, so I'm just done for the day. I'll take that. We took no L, so we're what now? We're 4 1/4, 5 1/4 for 5, I guess, something like that. Yeah, so yeah, we haven't taken a full L yet, but that's what happens, guys. And also today, usually I'm on here with 2 contracts. Turn this off. But usually I'm on here with 2 contracts, but today I knew was a high risk day, lots of news and stuff like that. So I went ahead and mitigated my risk. Instead of doing a 1-to-2 risk to reward ratio like y'all usually see on my charts, I have the PredatorX, which is the program that I'm running right here, set up to take profit and stop loss. We're going to be at the ATR. So if y'all don't know what the ATR is, it's average true range. I'm trading off the average true range. That's how I used to trade Forex. Shout out to No Nonsense Forex if y'all ever been on his channel. I considered him to be one of my main YouTube mentors because he's actually one of the people I listen to. But Yeah, guys, I had it mitigated my risk. I lowered my position size to 1 contract, and yeah, and also too, on top of what we made from the accidental trade we took last night. If you are using the PredatorX on NinjaTrader, and if you have these enabled, it will enter you either in a long or a short. So yeah, so it'll enter you if you have one of these enabled. So make sure you always have them disabled before you start. I had it enabled today. So what I tried today was I was still, as you can see, watching my trades, but I had the PredatorX enter the trade for me, and I was gonna go ahead and just manage it manually myself. It did have a trail stop set in place, but just due to overall news and stuff like that, I'm gonna go ahead and just stay out today. I mean, not stay out completely. We did make some profit, but yeah, as you can see, the whole time I was in that trade, it was just grinding its way to the top. And we did suffer a little bit of drawdown. Not much, but we did suffer a little bit of drawdown. But it was just completely grinding its way to the top. So yeah, that's it in a nutshell. I hope y'all enjoyed today's episode. That's the end of the trading week for me, and it will be back Monday. So I appreciate y'all watching. I hope y'all got some value from this video, and we'll see y'all on the next one.